Is Fantom on track long term? Let's discuss. So, hey everyone, welcome back to Upside Down Data. Today I want to talk about Fantom and whether or not the project is on track from a longer term perspective. So, in this discussion, I'm going to talk a little bit about Fantom's past performance and why a lot of traders have found it to be particularly interesting. We'll talk about some supply dynamics that are relevant to the prospects for Fantom going forward, talk about network utilization, technology, as well as its current DeFi situation to all give us this idea of where does Fantom stand currently and where might we think it's going longer term. So let's talk a little bit about its past performance. So one of the reasons why Fantom has been of so much interest to crypto traders is just how volatile it is and how extreme its moves can be. If we go from its all-time low in March 2020 to around its all-time high in October of 2021, we can see that it moved up over 200,000% to the upside. Absolutely massive gains. And importantly, in the meantime, as it was doing that, it had these waves where it would explode to the upside, it would correct heavily, it would explode to the upside, correct heavily, where a swing trader could ride that volatility and really make a lot of profit along the way. But then, of course, along with that, we've also seen during this bear market, Fantom fall around 94-95% to the downside from its all-time high. But importantly, not only does Fantom do this against the dollar, we also see that Fantom has periods where it massively outperforms other major crypto assets like Bitcoin and Ethereum. So this is looking at the Fantom Bitcoin valuation, which is basically the price of Fantom divided by the price of Bitcoin. So basically the value is how many Bitcoin one Fantom is worth. And when this is going up, that's a period where Fantom is outperforming Bitcoin. Where it's going down is a period where it is underperforming Bitcoin. And we can see that relative to Bitcoin from May of 2020 up through here to January of 2022, it rose against Bitcoin by 20,000%. So even at this period where Bitcoin went on a big bull market, had gone way above where it had started back in 2020, Fantom massively outperformed what Bitcoin did in that period. Then importantly, throughout this bear market, it's also massively underperformed Bitcoin. It's down 90% against Bitcoin in that time. So not only are we getting this volatility against the dollar, you're also seeing that against Bitcoin. You're also seeing that against Ethereum, a similar story here. And basically what that means is that in those bullish periods, historically speaking, at least in the last bull run, Fantom was a way better place to have your money versus Ethereum, and a better place to have your money versus Bitcoin during that bullish phase. But then as soon as the bear market began, then Bitcoin or Ethereum would have been a much better place to be if you're going to be in any volatile asset, given how much Fantom bled against those. And so what you might think of with Fantom is that it's a not great place to be in a bear market, but a great place to be in a bull market, historically speaking. So what I want to talk about next is, can we expect that type of dynamic to continue? Can we expect Fantom to again massively outperform Bitcoin and Ethereum in an next bull market? Or is this maybe something that was unique to this bull run that we might not expect to repeat in the next cycle? So a few things that we can look at when we're considering this. So one thing that I like to talk about when it comes to what we might think an asset is capable of doing in the future is its supply dynamics. And the idea here is that the more supply that there is out there, the harder it is for an asset like Fantom or any crypto asset to get back up to some price that it had at some point in the past. So as you'll see here, I'm on Token Unlocks here, the site that has this really nice chart of looking at the unlocks of Fantom supply over time and where those different Fantom are coming from that are entering into the circulating supply. What you can see is that a lot of the early unlocks have already happened. So at the time that we got to around July of 2020, then everything except block rewards had already been released into the circulating supply that we're going to expect. And now, since then, the only thing that's been adding to the Fantom circulating supply has been these block rewards going out to validators. And that's basically just incentivize validators to run and validate the network. But we're not seeing in Fantom, which makes it a bit distinct from some other projects, is these massive unlocks happening all throughout here, which a lot of other projects you would have seen that. You would have seen early backers or the team or founders continuing to get massive chunks of unlocks throughout this whole period. With Fantom, they kind of ripped the band-aid off very early, and all of that distribution happened very early on, and then now it's really just block rewards. So from that perspective, I think Fantom's at a better place with its supply dynamics than some of those other projects that are still getting these big unlocks happening, because when teams, founders, early contributors, when they get those unlocks, oftentimes they very quickly dump it into the market, and that creates a lot of selling pressure for an asset at a very concentrated point in time that can lead to big drawdowns in price. With something like block rewards, this should just be a steady sell pressure from validators, but not something that is that massive dump that we're seeing. And with those other projects, you would have seen a combination of the block rewards getting dumped and those big unlocks from the team getting dumped as well. So I think in some ways, Fantom, having done so much of that early, actually set it up to perform much better during the bull run. Really, as I was just saying, by around July 2020, all of that early unlock to the team, to founders, to early investors had already happened. And so then you saw this massive explosion. And during this, you were not seeing the team or early contributors getting new unlocks later on to dump, because they already had that. And not unlikely, they had already dumped earlier on, which then allowed Fantom to move much more freely as it went forward. So even though the total supply of Fantom has increased pretty notably since it was back there, you just look at the block rewards, 2.3 billion Fantom back here, for example. Now we're up currently at around 3 billion Fantom that have been unlocked through the block rewards. And we're already at around, 88% of the max supply being released. So currently Fantom sitting up at around 3 billion, a little bit above 3 billion total Fantom unlocked. We're getting close to fully maxing out, getting to the max supply. And so the idea here is that most of the inflation that's going to happen for Fantom has already happened. We only have a little bit more to go before we hit that max supply. All the block rewards have already been released that are going to be. And then from then on, Fantom would just be held up by transaction fees. It would no longer be new Fantom hitting the supply. Basically, the max supply would have been reached. And so from a supply dynamic idea, that is a positive in my opinion. I think Fantom sits at a better position than a lot of other alt L1s for that reason. Because once we hit that max supply, you're no longer getting this inflation diluting holders, and that might then allow price to move more freely in a bull market where you're not seeing that sell pressure from validators. And really, it's just then purely about supply and demand, who's willing to sell it at a given price point, and not extra inflation debasing the value of the asset. But there's a flip side to this that is more concerning in my opinion, and that's really has to do with this max supply being so close. And as I mentioned, once Fantom gets to that point where there's no longer block rewards being released by the protocol and it all is just transaction fees that are supposed to be propping up the network, you need to have enough transaction fees happening to incentivize validators to continue validating, to continue to incentivize people to continue staking Fantom. If you don't have that, if there's less incentive to stake Fantom, if the yield for staking Fantom drops because transaction fees are low and there's not a lot of money to be passing on to validators, then that can really start to disincentivise people from being a validator for Fantom, for staking Fantom. They might just go somewhere else where they're earning higher yield. So the question is Fantom currently doing enough transactions to make it so that we don't have to worry about that people will still be incentivized to continue to validate for Fantom and to stake Fantom, or are they going to look elsewhere? So let's talk about this. So let's go over here to FTM Scan, one of the block explorers for Fantom, and we can actually look and see what is the current transactions per second on the network. And so as I record this right now, it's pretty low. It's only 1.5 transactions per second, which is not great. And especially because the way that Fantom's gas works, the way that it basically figures out what the cost of a transaction is it uses a system like Ethereum with Gwei. And if you're not familiar with how that works, so basically if we go over here and we look at the calculation, one Gwei is worth 1 billionth of a Fantom. It's the same as Ethereum. Ethereum uses the same system. And we can also see from the Block Explorer that's currently only costing the median gas price is only 48 Gwei, which is tiny. If we just think about that, that's 48 billionth of a Fantom to do the median transaction on the network. Now, that being said, doing more complicated things like smart contract types of transactions will cost you more, but it's still very cheap. overall. And of course, that's one of the benefits of Fantom, is that it's a very cheap and fast chain to use. Technically, it's a DAG, a directed acyclical graph. So it's a little bit different than a pure blockchain, but that's one of the ways actually in which it's so quick, and I'll talk about that in a second. But one of the drawdowns then is that when you're at a point like Fantom is right now, whereas usage is not huge, transaction per second only 1.5, that means that very little value is being accrued by transaction fees. That's the issue, is that there's not that many transactions that are happening, and the ones that are happening are very cheap. So therefore, in nominal terms, in dollar terms, there's just not a lot of money that's being put into transaction fees on Fantom, which then means that validators for Fantom are not making very much money at all through transaction fees. And in fact, it even gets a little bit worse for Fantom, because when you look at the way that the transaction fees are distributed, they don't all go to validators. 5%, around 5% are burned. Other go towards this ecosystem fund. 15% goes towards this gas monetization program, which is basically, it's kind of an interesting program where deployers of decentralized applications actually get a cut of the fees that they generate if they're above some number of fees over a given point in time. It's basically a way of incentivizing people to develop on Fantom, because you would actually get some of the network transaction fees given back to you for providing that to the network. But only then 70% goes to validators. And what it seems like is that so far, these incentivizations for Fantom are not sufficient to get enough demand to really drive transaction fees or transaction usage, basically network usage, to a point where we'd expect transaction fees on their own to be self-sustaining. And so what I think would be likely to happen is that unless Fantom sees a massive increase in usage from something like transaction per second as being a gauge of that, what we're then going to see is that once Fantom hits this 100% of max supply, we're not seeing this subsidy happening from the protocol of block rewards. Then what we're probably going to see is the interest rate, essentially, or the staking rate, the rate that you would gain from staking your Fantom, to fall rapidly. Validators get substantially less in exchange for them validating the network, which ultimately might then lead to a bleed out of staking, where just fewer and fewer people are willing to stake Fantom because they're not earning enough yield on it. They'd rather go somewhere else. You know, if Ethereum is offering somewhere between 4 and 5%, why wouldn't you just stake ETH? Now that that's a thing, why would you stake Fantom if you're going to be earning less than that? And that, I think, is going to be the big concern for Fantom, that once it goes on, and we're going to get there not too long, really by the end of the year, according to Token Unlocks, is the projection of when we're going to get to that max block reward. That's going to be this point where the rubber's going to meet the road, and we're going to have to see, are transaction fees actually enough to incentivize people to continue to secure the network? If that doesn't happen, that is a big problem, and Fantom's really going to have to do something to figure that out, because you can't have a situation where all your validators shut down or all the people stop staking, because then your network becomes really vulnerable to attack. That it would not require a lot of financial investment to actually go and capture over 33% of the network to then cause a lot of problems. And that, again, becomes a problem for people looking to build on Fantom if they don't think it's as secure as somewhere else. Why would you go to Fantom? Why wouldn't you go somewhere else? So this is something that I see as being something that's going to be important to watch for Fantom going forward. And can it gain enough transaction fees to actually secure it? Or is there something else that the developers do, or that it gets voted in that ends up happening that changes this? It would probably not be something that people would generally like to see the max supply increase. But if things got worse enough or bad enough, it actually might be a thing that Fantom would have to consider to make sure that there's still enough financial incentive to secure the network. So this is something I think is really important to talk about. And it's one of the things that's kind of the catch-22 of a network like Fantom. So Fantom uses this Lachesis consensus algorithm, which, as I mentioned, is DAG-based. And one of the huge advantages of it, relative to something like Ethereum, is that's way faster and it's way cheaper to run a network like this. But one of the catch-22s of that is that when you have such cheap transaction fees and you're not getting a huge amount of demand for your block space on your protocol, then it becomes hard for it to become self-sustaining on transaction fees alone. Ethereum has this very interesting system where it has no max supply, But because they burn transaction fee, because a lot of the transaction fee gets burned on Ethereum, it actually is at a point where it's either level or even deflationary depending on market usage. And so a lot of protocols like Fantom like this idea of having a max supply because it gives this idea of scarcity and that at a certain point you're not going to be debased by inflation. But then one of the limitations is that if you haven't gained enough market share and enough demand, you then run the risk of not having enough incentive at that point when you're at max supply just based on transaction fees. And so I think that's something that, as I've been saying, I think Fantom's going to have to figure this out. Now, one of the benefits that Fantom has had, and one of the reasons why it's got a lot of adoption, really was one of those hot tokens during the last bull market, was that it is EVM compatible. It uses the Ethereum virtual machine, and it's able to compile decentralized applications using Solidity, being the main programming language used for the EVM. And so one of the benefits of that is that what we saw during the last bull market was tons of protocols being built on Fantom. Fantom, just under 300 protocols, actually sits well above a lot of other ones. You really have to go up to these top protocols, Ethereum, Binance Smart Chain, Arbitrum, etc., to get to places where they have more protocols deployed on them. Fantom was huge. But the other thing that's been concerning about Fantom is what's been going on with its DeFi ecosystem. So even though it has that many protocols, it slipped all the way down to number 26 in terms of total value locked. It used to be up in the top here, back at the end of the last bull run. And we see the total value locked on its DeFi ecosystem has dropped dramatically. And this is one of the other big concerns with Fantom. And this has nothing to do with the protocol itself or anything like that. It really has to do with one of the protocols that was deployed on Fantom. That was multi-chain. Sure, if you've been following Fantom, you're familiar with what happened. Essentially, the CEO of multi-chain, who is in China, got arrested by the Chinese authorities. And even though multi-chain was supposedly this decentralized application, wasn't really that decentralized. It really ended up being the case that CEO held all the private keys. When he got arrested and they lost access to all those servers where all of that was, then all that just got locked up. No one could do anything because they didn't have the private keys. In fact, that money has been getting siphoned off. Speculation now that it's actually the Chinese authorities who are doing this as part of this big anti-money laundering scheme that they've been doing, or anti-money laundering effort. And so basically what ended up happening was that all of the assets that got bridged onto Fantom via multi-chain, that's what multi-chain was. It was a multi-chain bridge, hence the name. All those assets depegged. And one of the things that really hit Fantom hard was that Fantom did not have native stablecoins on it, did not have things like native USDC. And so all of the USDC, for example, that was being used in the Fantom DeFi ecosystem was for the most part, or predominantly, USDC that was bridged via multi-chain. So when all these issues with multi-chains happened, that USDC depegged. It no longer held its peg, to the dollar, fell off, and then we saw this big kind of final crash that we saw through here. And Fantom, its DeFi ecosystem has not really been showing signs of recovering after that. It really blew out a lot of value that was locked on the protocol and really wrecked a lot of people who were holding USDC on the platform. And this is one of the other just big issues with Fantom, is that stablecoins are really important for DeFi. Not only is it important just for people to be able to hold their funds on the chain on something relatively stable like a stablecoin, but it's also important for things like people like to use stablecoins for collateral. They like to provide liquidity in US or in stablecoin pairs. There are different advantages of that. Obviously, if you're doing a stablecoin pair, you're not susceptible to impermanent loss, which a lot of people think is a benefit, is a good thing. You're just farming the yield. There are also even benefits of doing a stablecoin volatile asset pair where you can do things like hedge against downside risk, even though you're giving up some of the benefit in an upswing for that volatile asset. There are multiple different reasons why stablecoins are important for a DeFi ecosystem. And so because Fantom does not have native support for those stablecoins, and especially given what happened with multi-chain, it's probably going to make a lot more people worried about just going to the next bridge stablecoin in as large of a size because of this risk of maybe the protocol not being as decentralized as people say, or of it getting exploited like bridges often do. It's much better for an ecosystem to have native support from a stablecoin, and Fantom currently does not have that. And so when we put all of this together, I think what we're at is a situation where Fantom, from a supply side, at from a larger view, kind of devoid of context, looks good. Most of its inflation's already happened. It's going to end soon, and so that might be a reason why Fantom could move more freely like it did in the past. But the concerns that Fantom's going to have to get through to realize that are it's going to need to get to a point where it's actually self-sustaining from something like transaction fees or some other solution that is come up with to basically get to a point where it still is financially or economically viable to continue to secure the network for validators, that they're not just going to go somewhere else where they're getting better yield. And then also this issue with the follow-up from multi-chain, and can it reestablish itself in the DeFi ecosystem? Because really with Fantom, that was one of the big value drivers for it in the last bull run, was its usage with DeFi. Tons of exploration, tons of experimentation happened, and a lot of things are nice about Fantom for DeFi. It's very cheap, it's very fast. So being someone who doesn't want to necessarily pay super high transaction fees on Ethereum, Fantom's a great alternative to that. But Fantom has gotten really slammed by a lot of really negative events in that space. And so it recovering from that is probably going to be important for us to think that it can do the same thing again like it did in the last bull market. Now, obviously, this is crypto and nothing is impossible. And as I mentioned, the benefit that Fantom has is great technology, and really that if the demand comes, I think a lot of people will be happy to be using Fantom for a lot of those different things. The problem is that as it stands right now, there's just not a whole lot of demand for Fantom block space or just for Fantom transactions. It is operating at way below its capacity for transactions per second. And as a result, the transactions are ridiculously cheap right now, which just means that there's not a lot of financial incentive from transaction fees alone to be securing the network. And so from my kind of longer term view for Fantom, I think it's an interesting one to watch, and historically has shown a lot of characteristics that are nice in an altcoin, especially in a bull market. But I think we're going to have to be very critically watching some of these other things and how they develop before we want to get too confident in just thinking that, yep, definitely Fantom's just going to do this again in the next bull run. I think we're going to have to see a lot of things, how they develop, before we can get more confident in that. Now, none of this is financial advice. You should make your own opinions about Fantom, where you think it's going long term. But I wanted to bring these things to light as things that I think are at least important to consider, to keep in mind with something like Fantom of where we might think it's going next. And you might have a different perspective. You might think that demand is only a heartbeat away, and that we're soon going to see Fantom doing thousands of transactions per second, and that the gas fees are going to go up and it's going to become self-sustaining. That's fine. I leave that up to you to make that determination. But the main thing I wanted to talk about in this video is, what are these different issues? What is the current state of Fantom? Where might we think it's going in the future? And from the perspective of some of these other issues. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates with indicators and more over there. And check out our website, partydigital.io, where we have a lot of data from our models. We have models for Fantom, such as our risk models for Fantom, and a lot more. Link to the site is in the description.